Okay, first of all, I will discuss the agenda of this session and the webinar, that what we are going to be, what we will be doing in this session, and what will be the agenda of this session. Okay, first of all, we all know that that F7, that is financial reporting paper, the papers are about to be started, and this is one of the most important time right now, and definitely the students and the candidates are nervous that what to do and what not to do, how to revise the course, and what should be the action plan for the next 3 to 4 days. Okay, first of all, always remember in F7, that is financial reporting paper, there are 3 sections. Definitely you all know that about the paper pattern of F7 financial reporting paper: section A, section B, and section C. And what I have observed, that the candidates and the students are preparing themselves for the section C, and they are working a lot more. They are working hard on the consolidation side and the final account side, and definitely on the ratio side. Definitely these 3 topics are no doubt very important for the paper, and these 3 topics are very important for the section C area, no doubt. There is no question mark on that one. But remember, what my viewpoint is, that if a student wants to pass the paper, and if he wants to get through this paper, and he just want to ace this paper, remember section A and B is the area that will help you out to clear this paper. I mean, section A and B is that part of the paper. If you will score good marks, and I have observed this one in the past papers and the exam analysis and the feedback given by the examiner on the successful and the unsuccessful students after the results, they have clearly identified that if the student has scored a good marks in section A and B, like if out of 60% you have scored 40 to 45% marks in your section A and B, definitely now there will be a very huge probability that you can definitely clear this paper, or you can ace this paper. So remember, section A and B are equally important. Most of the times the students are working hard on their section C side. They are working a lot more for the final account on the consolidation and ratio side, but they just forget about the section A and B. If you will not practice for the section A and B, definitely you have to face the music. So make sure that you work for the section A and B as well. Okay, coming back to the session. So my agenda of this section, or this session, or the webinar, is that I'll be focusing more on the section A and B. Definitely you will be working hard, and you are doing the practice for the final account, past papers and specimen, and the mock exams. You are going through all these areas. But now in this session, I'll be focusing more on the section A and B areas. Whether you know about this one, examiner half yearly issues the examiner reports. You must have gone through these examiner reports, or if you haven't gone through this one, so I will be giving you the awareness of this session. The examiner give you the examiner report every half year, like June and December. And in that examiner report, examiner point out or give some questions, or the MCQs, that is objective test questions and objective test cases, highlighted in that examiner report. And these are the questions that examiner clearly mentioned that these were the most difficult MCQs, and majority of the students were unable to clear or to score good marks in that particular questions. And these are considered to be the most difficult questions. We all know that there is no past paper for the section A and B. We don't have any past paper for section A and B. Yes, we can find out the past paper for section C, that is final account, consolidation, and ratios, but we don't have any past paper for section A and B. We can say that there is a past paper for section A and B, and these are the selective questions that examiner highlights that these were the most difficult questions, and students were unable to attempt those questions, or they were unable to secure good marks in that particular question. So what I did, I just fetch out these questions from the last 2 attempts, that is the December 2022 and June 2022 attempt. And these are the difficult questions. As per the examiner report, that majority of the students all over the world were unable to attempt those questions. So we are here, and I'm here to give you the insight of those questions, that what was the difficulty and what was the examiner's report. That examiner most of the time highlights that what student did, what went wrong, what students were actually did, whether they were reading the questions properly or not. So what were the examiner's insight, we will inshallah discuss in this session. that what should be the actual answer. And definitely it's a practice to pass webinar. So this will not be the case that I'll be solving all the questions. We will definitely, by the mutual concern, will solve the question. First, I will let you to try, that you try the question, you try to fetch out the answer, you try to calculate the answer, you try to give the correct answer, and then I will show you the examiner suggestion, the examiner report, that what examiner did and what examiner actually highlighted the errors which a student made. And these are very technical questions. Technical questions in the if I say why technical questions, because students, most of the students were not reading the questions properly. Let's start with this one, and let's move on to the first question. And we will read the question first. I will read the question first, and definitely you will be trying first. You will try this question first, and then we'll discuss that what mistakes you were, if you just achieve a very good, and if you are able to score good marks or 100% marks in that particular question, it's good to go, perfect. But if you are not able, then we'll discuss. And remember, examiner has highlighted that these are the most difficult questions. These were the most difficult questions, and majority of the students were unable. Let's see that whether you can do that question or not. On 1st January 20x5, Factman Company acquired a piece of equipment at a cost of $25 million. The equipment has a useful life of 5 years, and the company must decommission the equipment at the end of the 5 years period. It means that is a dismantling cost. Basically, the examiner is testing for IAS 16, is it? And remember, IAS 16 is one of the most important standard. IAS 16 is one of the most important standard with respect to F7 financial reporting papers. So make sure that you have a very good grip on IAS 16. Okay. The estimated cost of the dismantling is 5 years time is $10 million. That is the future value given in the question. Factman cost of capital is 10% per annum. The present value of 5 years time with a discount rate of 10% is 0.621. And we all know that if the present value, if the discount factor is given in the question, it means we do not need to calculate the formula. Definitely discount factor is given. We can simply multiply the amount. Okay. Factman has correctly capitalized the equipment and recognized the provision for decommissioning cost. So what's the problem? Examiner is saying that the entity or the company has capitalized the equipment, and they had already made the provision for the decommissioning cost or the dismantling cost. Now, what is the requirement? Let's read out the requirement. What is the total charge to profit and loss relating to the equipment and decommissioning provision will be required for the year ended 31st December 20x5. It means the asset was acquired on 1st of January, and examiner is definitely asking for the amount of P&L for the year ended, for the first year ended 31st December 2005. So that is the requirement. And remember, there is a total charge required by the examiner, that what total amount should be charged to P&L. There is no requirement for the balance sheet. There is a requirement for the financial statement, that is P&L extract is required, that what amount should be charged to P&L. I would request you to all to please participate in this one. And try to solve this one. Please try to solve this one. First, you should try to solve this one, and then I will take you on board. I need the right answer, the correct answer, the net answer. I don't want the answer that is the depreciation should be charged for with this amount and the finance cost should be charged with this amount. I need the accurate answer. And remember, you can definitely answer the question by selecting everyone, so that everyone could know that what you are saying and what the answer is given by you. Yes, Lavisa, definitely I'll show you with the questions. And let me know the answer, exact answer that I should type over here. Okay, one mistake that is I will highlight, that examiner has highlighted that mistake. Okay, different answers I'm getting. They are directly messaging me, that is depreciation as 5,000, Maria Mohsin 5.621 million. Remember, okay, 5625 million by Michelle Iqbal, Mas 5621 6925 000 6863. Okay, different answers, different answers. That shows that examiner was right. Examiner was quite right that yes, this was the difficult question. Is it? If this was the easiest question, so you must have, everyone must have given the correct or the same answer. Okay, let me try now first. Okay, let me try. Let's have a look that what is the correct answer and what will be the correct way to solve this one. On 1st January, the company acquired a machine. It means the cost of the machine is 25,000. And remember, one mistake that the examiner has identified in this question, that if the answer, look at the answer line, the triple zeros are given in the question. Remember, there could be three possibilities. The first possibility is the examiner has given you the three zeros. It means now you have to write the answer in thousands. You have to write down the answer in thousands. The other possibility could be there would be a blank. There would be only a blank. Nothing is stated in front of this blank. It means now you have to write out the answer in the full figure, in the complete value, with along with all the zeros. And the third possibility could be that examiner has given a blank, and in front of this blank the million is written. It means now you have to give the answer in millions, like let's say 2.5 million, 3.5 million, whatever will be the answer. Now you have to give the answer in that form. If for example the answer is, let's say 2.5 million, let's say 25 lakh, okay, and if you have written 2.5 million, this would be marked as incorrect. That is the problem. That is the insight given by the examiner, that most of the students, what they did, they write the answer in millions. Or most of the students, what they did, instead of the zeros are over there, what they did, they write or they type the full value or along with all the zeros, that is the full figure was typed in that blank, and definitely this would be considered as incorrect answer. So that should be kept in mind, that you have to look it out, that whether the answer or the underline or the blank is given, and if the triple zeros are given or not, if there is a complete blank line, or whether the word million is written or not. So you have to present the answer in that way. Okay, let's start with the solution. The cost of the asset or the equipment was, let's say, $25,000. Okay, now the decommissioning cost is $10 million, and that is a future value. We have to calculate the present value of 10 million, and definitely the present value of the discount factor is given, that is 10,000 into 0.621, that is 6210, that is the present value of dismantling cost. It means now the total cost of the asset is 6210 plus 25,000. This will make 31209. That is the cost of total asset. And remember, if the examiner is asking for the total charge, we all know that the total charge means two things will be reported in P&L. Number one, the depreciation for the year, and second one will be the unwinding, that is the unwinding of the dismantling cost. So the total cost of the asset is 31209, and it was purchased at the start of the year. It was not the mid-year purchase. So definitely a depreciation for annual depreciation will be calculated, that is 31209 divided by the life of the asset is 5 years. So the annual depreciation is 31210. Okay, sorry, 25,000 plus 6210, that is 31210. 31210 divided by 5, that is 6242. 6242 is the depreciation. That is the annual depreciation, 6242. But that is not the complete answer. That is not the complete answer. Remember, the examiner requirement is that is total charge to P&L. It is not the depreciation charge to P&L. If there would be have a requirement of the total depreciation charge to P&L, definitely that would have been the correct answer. That is 6242. Many of the students type the answer that is 6242, but that is not the complete answer. We need to unwind it, and dismantling cost was recorded at its present value, that is 6210, and we need to calculate the finance cost, that is 6210. That is 6210, and that is 10% would be the unwinding 6210, and this will make 621. And definitely if we can make the entry of this one, the entry is finance cost debit and dismantling cost or the decommissioning cost will be credited with the amount of 621. And there could be another tactic or the another technical thing that examiner would have applied, that is, if the examiner would have asked the question, or it would have asked the total charge for the year ended 31st December 2006, 20x6. So it means we have to compute the unwinding for the year 2, and we all know that to calculate the unwinding or the finance cost for the year 2, the formula would be quite different. But right now, as per the requirement of this question, the total charge to P&L would be 6242 plus that is 621. That is the correct answer is 6863. That is total charge to P&L. Simply I have to type 6863. Remaining 3 zeros are already there, so there's no need to put the amount 63863 because triple zeros are already there. Okay, one question that has been raised by Mars, that Factman has correctly capitalized the equipment and provision. Mars, you are perfect. Your question is valid, but remember, there is a cost separately given in the question. That is a cost of 25 million. It's not that the present value of dismantling cost is already included. Remember the requirement, the wording of the question. Remember, if the examiner is saying that it was a difficult question, it was not a difficult question, that the calculation was quite different. The difficult was in the sense that the wording was quite complicated. Now, let's read out the question again. On 1st January, company acquired a piece of equipment of $25 million. It means that is a purchase price. Now, what is the purpose of that sentence or that phrase or that wording or that information? What is the purpose? That purpose of that statement is that a company has properly and correctly capitalized the asset in the balance sheet. That is the purpose of that statement. Clearly stated in the first sentence, Mars, that on 1st January 20x5, Pacman acquired a piece of equipment at a cost of $25 million. That is the purchase price. That is the acquisition price. The further, the decommissioning cost of $10 million, that is a present, that is a future value, and we calculated the present value of that particular amount, and then we capitalize that amount to the cost of equipment. Is it clear to everyone? Hunaid, for which receivable you are talking about? For which receivable you are talking about? Okay, the second paragraph, the second paragraph. Okay, that is the discount factor. Hunaid, that is the discount factor given in the question. That is the discount factor. This is not the part of a question, or this is not the part of an even curriculum or the syllabus, that how the present value or the discount factor has been calculated. This is definitely annuity chart. You must have gone through this one in F2 paper, that is a management accounting. So that is the discount factor given in the question. Okay, perfect. No problem. No problem. Okay, let's move on towards the next difficult question. Next difficult question, as stated by the examiner, that again, that was the question was mainly not attempted by the students, or the one who has attempted this question, they went wrong. They went wrong. Please try this question by your own. First, try this question by your own, then we'll have commenting on this one. Then we will solve this question. I request you all to please participate in this one. This is the practice to pass. No doubt it's very easy for me that I just start the solution of this question, but this will not enhance your capability. So I just request you all to please participate in this question. Try to solve this question. Okay, Michelle, good. Everyone, please participate in this question and let me know the answers. $1 million in case of brand and training, 450. Good, perfect, nice, nice, very good. Junaid, Michelle, very good. Any other else? Maz, 450, training cost, brand amortization, 1 million. Nice, very good. Training cost, 450. Okay, perfect, Muskan, Zabardast. Nice. It means examiner was incorrect. Examiner was incorrect that this was the difficult question, but here the champions are there. Okay, let's solve it. Let's evaluate the question, and let's highlight the area which examiner has highlighted, that what student did. What was the mistake that was done by the majority of the students? Okay, second company acquired a brand name with estimated useful life of 10 years. On 1st January 20x2 for $10 million. On 1st January 20x5, a brand specialist believed the brand to have a fair value of $14 million. Okay. The brand was acquired on 1st January 20x2. On 1st of January 20x5, the fair value or the market value of the brand was $14 million. Second company also ran a training course on 1st January 2005 for all staff on how to use the software system. The training cost was 4,50,000. On average, employees are expected to remain for 3 years. It means the training which is provided to the employees, they have an expected contract with the agreement, or the agreement with the employees, that they will be working for the next 3 years. Okay. Now the requirement is how much should be recognized an expense the statement of profit or loss for the year ended 31st December 20x5 in respect of each item. First of all, the brand amortization. Now, the majority of the students made the mistake in that particular exam, which examiner has highlighted, that the students calculated the amortization on the market value. Majority of the students calculated the amortization on the market value, as examiner has clearly stated that the market value is given, but there is no point that the company has adopted the revaluation model. Company has not yet adopted the revaluation model. The fair value or the market value is given in the question, no doubt, but it doesn't seem that company is adopting the fair value or the revaluation model. So it means now the amortization should be calculated on the cost model as it was calculated every year. That is the 10 million is the cost of the brand, and the estimated life was 10 years. Yes. And definitely the brand amortization for this year would be 1 million. And definitely in every year, the brand amortization will remain the same. That is 1 million. So 1 million is the correct answer for the brand amortization. Now, another mistake that was made by all the students in that particular attempt was that what the students did, they proportionate that 4,50,000 over the period of 3 years. Remember, in IS 16, it was clearly stated that any training cost or the staff training cost in every standard, In every standard, even in IS 37, training and relocation cost. In IS 16, staff training cost. IS 38, intangible staff training cost will never ever be capitalized. Advertisement and marketing cost will never ever be capitalized. So whatever the staff training cost has been incurred for the year will be directly charged to P&L. It means there is no point to allocate or to apportion that expenditure over the period of 3 years. So definitely that amount will directly be charged to P&L. Is it clear to everyone? Muskan, you made the same mistake. No amortization will not be 2 million. Are you getting my point? Rabian, it's not the internally generated, as IS 38 allows you to adopt the revaluation model. If the examiner has written there that if the examiner has given the information that company has decided to adopt the revaluation model, that definitely we would have calculated the depreciation or the amortization at its market value. Rabian, is it clear to you? Mars being a very lazy person, he is not even willing to write or type yes. Why? Yo, okay, perfect. Okay, shall we move on to towards the next difficult question? Exactly, Duab. Exactly, you are right. Perfect. Okay, let's move on towards the next question. That is the question 3. Okay, that is a theoretical question, and most of the time students do not focus on the theory areas or the basic standard or the basic areas. So that is the and you must remember what I have observed in the exams, in the past paper exams, that examiner is testing at least 1 or 2 MCQs from the very basic area, from the theoretical area, that is a conceptual framework and regulatory framework. So you should go through that one. You should go through that one at least once, so that if any because these are the very easiest MCQs, and if you are not gone through this one, you will face difficulty in answering those sort of MCQs. No, Bilal, if there's a good question by the Bilal, there is good question by the, let me go back first. Okay, the one of the candidate is asking that let's say if I have marked the answer 1 million, that is correct, and the other part was 150, and for example the student marked as that 150. So one is correct, the other one is incorrect. So will I be getting the half marks? No, that particular MCQ will be marked as incorrect. Bilal, is it clear to you? You can definitely ask question by clicking everyone, so that everyone could know that what you are asking. Okay, Bilal, thank you. Okay, let's move on towards the another question. That is question number 3. Question number 3, it's a theoretical and a question that relates to the framework. Read out that question and try to answer, please. Try to answer this one. Remember, theories are equally important. Theories are equally important. You should go through all the theory areas. Must B and C. Okay, Michelle, A and D. Good. Perfect. 2 answers are required. Okay. A and D. A and D. Okay, good. Perfect. A, D. A and D. Okay. Okay, perfect. Zabardast. Which 2 of the following statements are true regarding the conceptual framework for financial reporting? Okay. Conceptual framework. There were 2 main categories of the conceptual framework. That is the qualitative characteristics, and second one was the elements of the financial statement. If you guys remember this one. Okay. Now there are 4 points, out of which we need to identify the 2 correct statements. Let's read out the first statement. That is, it is principle based. Yes, conceptual framework is there are 2 There are two systems, that is the principle based and the rule based. If you guys remember, principle based and rule based. Principle based are usually the IFRSs, and it means that is the conceptual framework. And rule based is basically the national laws. That is the national laws. So if we are talking about the conceptual framework, it is not the rule based, it's a principle based. It is based on judgments, estimations. However, rule based, it's a cookbook approach. If you remember that word, if you remember that phrase, rule based is basically a cookbook approach. Okay, it is a principle based rather than rule based. Perfect. But it is not IFRS, that is a specific standard. Yes. Remember the conceptual framework, there were qualitative characteristics and there were the elements of financial statement. That conceptual framework is not any, this is not the specific standard. This is not the specific IFRS. This gives you a rules. This the conceptual frameworks helps the preparer to set up or to develop the accounting standard. This will give you the basic guidelines that what standards and how standards should be developed. The statement 1 is correct, no doubt. The statement 1 is correct. Let's find out the another statement. Okay, second statement. Let's read out the B statement. The principles contained in the conceptual frameworks overrides any IFRS. No, that is not the case. Remember, if any treatment that is given in this specific standard will override the conceptual framework. Let me give you a very basic and a very good example. Normally, if we look out the conceptual framework, there was an element of financial statement. An element of financial statement, there were the definitions of assets, liabilities, and equities. Okay, liabilities. The definition of liability was that the present obligation as a result of past event. Liabilities should be recognized when the reliable estimate could be made. It means if you know the amount of that liability, just recognize this one. Okay, that was the framework. That was the conceptual framework, that when a liability should be recognized, when there's a present obligation. If you have a present obligation and you recognize the amount, you can recognize the amount of that particular obligation, record that particular amount as a liability. Full stop. Moving on to the next page. IAS 37. IAS 37 gives you the guidelines for the provision. Provisions are the liabilities. Is it? Provisions are the liabilities. And when the provision should be recorded, if it is probable. If it is probable. Now, there is a contradiction. Conceptual framework states that a liability should be recognized when there is a present obligation and you can make a reliable estimate of it. Just recognize that liability. But in IAS 37, provision is recognized as a liability when it is probable. So it means now there is a contradiction. Whether we should follow the conceptual framework or that particular standard. Now, the particular standard will override the conceptual framework. So it means that a statement is incorrect. That a statement is incorrect. Are you getting my point? Are you getting my point? Is everyone is clear on this point? That the conceptual framework will never override the IFRS. Yes, the specific standard will override the conceptual framework. Okay. The third statement. It requires the accountants to evaluate and address the threats to compliance with the fundamental ethics principle. No. Remember, in a conceptual framework, we never ever talk about the ethical principle. You must have gone through the F1 paper, business technology. You must have heard about the ethics. You must have heard about the topic of ethics. We never ever, you just gone through throughout the whole course of F7, financial reporting. We never talked about the ethical principles. So it means conceptual framework never ever discuss about the ethical principle. Yes, what? Who will discuss about that is the code of ethics. So code of ethics is there. This will guide you for the ethics. For conceptual framework, financial reporting will never teach you ethics. Okay, last option. It is revised. If it is revised, it will not. The most important word is there. If it is revised, it will not automatically lead to changes in the IFRS. Yes. If the conceptual frameworks are revised, for example, if the definition of asset is revised, or for example, any conceptual framework is revised, it is not that the particular or any IFRS will automatically be revised. No, We have gone through, you must have gone through the standard setting process. Whenever there's a change, there is a standard setting process. First of all, the draft paper is prepared, discussion paper is prepared, and then that is sent to different countries for the comments, and then the exposure draft is prepared, yellow paper is prepared, then final draft. It means there's a standard setting process. This will not automatically. So that correct answer is A and D. Is it clear to everyone? And let me know the examiner comments. What examiner said? That students were weaker on their theoretical area. They were unable to answer. They were unable to answer the correct answer. They were unable to highlight the correct answer. Okay, let's move on towards the fourth question. The most difficult question as per the examiner. And that question is respect to the consolidation. Now, consolidation being a very, very important part of the paper. What I believe even that consolidation will consist of around 25 to 30% of the paper. 25 to 30%. How? 20% will be tested in your section C. Most expected. It means 20% in section C and around 2 to 3 MCQs in section A and B. Consolidate, even most of the times students says this one, that we didn't give the paper of F7, we were attempting the paper of consolidation. This is the common feedback given by the past students. So that is the question related to the that is related with the consolidation side. Please try to solve this one. Again, let me recall you, this is the practice to pass, this is P2P, and you need to work it out. Please try to solve this one. Michelle, very good, excellent. I request everyone to please participate in this one. Okay, all true, true, false, true. All true, good. Abdul Qadir, true, false, true. Okay, Dua, true, false, true. Okay. Sayyida Zainab, true, false, tire. Oh, true. Okay. Okay. Okay, let's read out the question and try to solve this one. Pearl Company has controlled 80% owned subsidiary of Silver for many years. Silver Company sold goods to Pearl Company. First of all, we need to identify that subsidiary sold goods to parent. Silver sold goods to Pearl Company for $120,000. That is the selling price, and a markup of 20% during the year. Pearl Company had half of these goods by the year end. It means 50% goods were unsold at the end of the accounting period, which means the element of unrealized profit will definitely arise. Which of the following statements regarding the intra-group transactions in the consolidated statement of consolidated financial statements are true or false? The first statement is revenues must be reduced by, for example, okay, let's try to work it out, that what will be the impact of this transaction, and then we'll go through the options. First of all, there is a sales of 1,20,000. There is a sales of 1,20,000 and subsidiary sold goods to parent company. And we all know that that the sales amount will be eliminated, that is the intra sales will be eliminated, and definitely there will be an intra purchases amount of 1,20,000, 1,20,000, and this will also be eliminated in the consolidated financial statement. Okay. Another thing that we need to work it out, that is the unrealized profit. Let's calculate the amount or the value of unrealized profit. Let's say 1,20,000 multiply by 20, and there's a markup. It means will be divided by 120. So let's work it out that what will be the value. 120 multiply by 20 divided by 120. This will make a 20,000. This will make a 20,000, and that is the profit. That is the profit. That is not the URP. 50% of the goods remain unsold. It means now the unrealized profit is 10,000. The unrealized profit is 10,000. Okay. Now, what will be the impact on consolidated P&L? As we can see that the options are clearly focusing on the consolidated P&L side. Okay. First of all, we need to eliminate the sales value. Is it? It means revenue will be eliminated or will be reduced by 1,20,000. 1,20,000 revenue will be eliminated by 1,20,000. This will be eliminated. Okay. Second point, purchases will definitely be eliminated, and we all know that in consolidated P&L, never ever the examiner will provide you with the purchases value. This will always give you a comprehensive figure, that is the cost of goods sold. It means we need to adjust that particular amount in the cost of goods sold, in the cost of sales. Now, if we wanted to eliminate the purchases, it means we need to reduce the cost of sales. We need to reduce the cost of goods sold by 1,20,000, as there is a direct relation between the purchases and the cost of sales. It means if the purchases will reduce, definitely the cost of sales will also be reduced. It means revenue will be reduced by 1,20,000, cost of sales will be reduced by 1,20,000. Okay. Now, last one is the URP, unrealized profit. We all know that we need to eliminate that unrealized profit from the accounts. Now, that unrealized profit is in the books of a parent company in the form of inventory. Okay, if you wanted to reduce the unrealized profit, definitely the adjustment will be made in the cost of sales of a parent company. Now, how we can eliminate that unrealized profit? We need to eliminate the unrealized profit from the ending inventory. So it means ending inventory will be reduced. And remember, we don't have ending inventory, the value of ending inventory. So if ending inventory will be reduced, which means the cost of sales will be increased. So we all know that in order to eliminate the amount of URP, unrealized profit, what we do, we normally increase the cost of sales. It means now the net amount, the cost of sales will be reduced by 1,10,000. It means the first statement was revenue must be reduced by a total of 1,20,000. That's a true statement. Cost of sales must be reduced by a total or a net of 1,10,000, and it's a correct statement. It's a true statement. Few students mark it as false. Are you getting my point? Those students who are marking the second statement as a false, is it clear to them? Please let me know. Rabian, you mark the second statement as a false. Lavisa, you mark the second statement as a false. Okay, perfect. Now the third statement, non-controlling interest will be reduced. So is there any impact on the non-controlling interest? Yes. There will be an impact of non-controlling interest. There will be an impact of URP on the non-controlling interest. Why? Because the goods have been sold by the subsidiary to parent. It means that unrealized profit, that URP is in the profit of a subsidiary company. Remember, if this unrealized profit is in the accounts of a subsidiary company, it means now while attributing, if you must have remember the profit attributable to, we definitely attribute the unrealized profit, that is 20%, 10,000, the 20% unrealized profit will be deducted from the NCI. So it means the third statement is equally true. Is it clear to everyone? Okay, what if let's recall one more thing. What if the situation is reversed? If parent sold to S, if parent sold goods to S, would the last statement be true? Let me know via chat. Please let me know via chat. Exactly, Hunad. Excellent, Mars. Very good. Michelle, Maria, good, excellent. Muskan, Misbah, very good, excellent. There will be no impact on NCI. There will be no impact on NCI. So you should be very alert for this one. Examiner might ask you such kind of question. Is it clear to everyone? Is this question is clear to everyone? And shall we move on? Rabian, can you repeat the question? Okay, Ali, let me repeat. Okay, let me repeat the question again. What I said that there was a statement that the parent, sorry, silver company sold goods to pearl company. It means the subsidiary was a selling company. If the subsidiary is the selling company, Ali, Rabian, if subsidiary is the selling company, it means the unrealized profit is in the books in the accounts of a subsidiary company. Now the URP will be eliminated from the profits of a subsidiary company. And remember, subsidiary company's profit is divided into two categories, into two parts. Number one is the group part and second one is the NCI part. If we are going to eliminate the URP from a subsidiary company, it means now the URP will also be eliminated from the NCI. But what if I just change the situation? If parent sold goods to subsidiary company, now the profit is in the books of parent company. It means now the URP is in the accounts of the parent company. Will there be any adjustment in NCI? No, there will be no adjustment in NCI. Is it clear, Muhammad Ali? Okay, perfect. Okay, now the next question. And the next question is basically the OT case. That is the OT case. Objective test case. The scenario is in front of you. Nice. Scenario is in front of you. Good. 5 questions will be tested from this OT case. 5 questions will be tested from that OT case. And as per the examiner comments, this was the difficult OT case and the students were failed to secure full marks in that particular OT case. The situation is in front of you, the case is in front of you, and then we'll move on towards the requirement. And remember what I have observed whenever the examiner tests for the OT case, out of 5 questions, 1 or 2 questions will be very general. They will have a no link with that particular scenario. This will save your time. This will save your time. No calculations will be required, or the answer would be on the front or on the face of it. There will be a very simple question in that particular OT case. This has been observed quite a couple of times. Okay. The scenario is there. Let me read it out. The scenario. The company is in the process of preparing its financial statement for the year ended 31st December 2006. There are 3 transactions have not yet been accounted for. Okay. The transactions have been identified with dates. 1st October 2006, a sale was made for a large piece of technical equipment which included a 3-year service plan. Okay, try to identify the standard, which area the standard or which standard the examiner is targeting, is focusing on. The total sale price is 1.8 million, which was paid on 1st October 2006, and the technical equipment was delivered on that date. On its own, the technical equipment would normally be sold for 1750, and a 3-year service plan would normally be sold for 1,65,000. Yes, it's IFRS 15. Exactly, it's IFRS 15. So it means the first contract or the agreement is with IFRS 15. And remember, in IFRS 15, this is targeting on the standalone prices and discounts and the performance obligation and separate performance obligation. We'll discuss this one. Okay. 18th November, machinery sold by company in January 2006 was found to be faulty and various parts were replaced by company under warranty. Company would normally sell the replacement part 80,000. The total cost of a company of the replacement part was $60,000. This is again with respect to IFRS 15. So what examiner actually is asking, we'll definitely go through the requirement, and once the requirement, we will read the requirement, we'll get to know that what to answer and what to calculate. We'll definitely got to know about this one. Third, that is 1st December 20x6, company entered into a contract for the sale of goods for $200,000. Company received $200,000 on 1st December. Company has the right to repurchase these goods on 1st April for $240,000. Again, it's a repurchase inventory, repurchase agreement, IFRS 15. It means the whole OT case or the scenario is linked with IFRS 15. Straight away, 10% of the weightage is given to that particular standard in that attempt. Okay, now let's move on towards the question. Question number 1. With respect to that particular OT case, which two of the following criteria are required before entity should account for a contract in accordance with the IFRS 15 revenues from contract with customer? And remember what I said, that in this question there is no linking with the scenario. There is no linking with the scenario. It's a general question, it's a theoretical question, and for which you have a very good grip on the theoretical side. If you guys remember the 5-step approach, given by IFRS 15, 5-step approach. The first step was to identify the contract. The first step is to identify the contract. The first step is to identify the contract. And remember, for contract, you must have gone through the F4 paper, and if not, it's not necessary to go through this one. Let me recall, contracts is an agreement which is enforceable by law. And there are certain essentials of a valid contract, that a contract should have been agreed by both the parties. Agreed by both the parties. It means there should be an offer and acceptance. There should be an offer and acceptance. You must have given the offer to the other party, and other party must have accepted that offer. It means that there will be a contract. There should be a commercial substance. There should be a commercial substance. It means the parties should be benefited. There should be no social agreement. There should be a business agreement. There should be a legal agreement that must have created a legal obligation on both the parties. And a contract may be oral or it may either be written. It could either be oral or written. It means these are the few essentials of a valid contract. So let's read out the options. All parties to the contract have approved the contract. Yes, that is the right answer. That is the right point. It means there should be an offer and acceptance. The contract must be in writing? No, it's not necessary. It's not necessary. A contract may be oral and it may either be written. Even it may either be implied as well. The contract must have commercial substance. Yes, it's true. Commercial substance means the parties must be benefited. There should be a business contract. There should be a business contract. Any social agreement will not be considered as a contract. And last, it is possible that a consideration will be collected from. It is possible. No. It should be probable instead. Yes, Junaid, you're right. It should be probable. It should be probable that there must, if for example, company says that it is unlikely that we will receive the amount from the customer, IFRS 15 clearly states that you're not going to recognize this revenue. Is this question clear to everyone? Okay, another question. And again, what I believe that this question has no link with the scenario. No link with the scenario. Read out the question and try to answer this one, please. Okay, B, C, B, B, okay. Okay, let's discuss this one. IFRS 15, revenues from the customer requires the transaction price to be allocated to the performance obligations. First of all, let's recall. Identify the contract with the customer. Second one is the identify the separate performance obligation. Second step. Third step, determine the transaction price. And fourth step, that is to allocate the transaction price to each performance obligation. And what was the criteria for the allocation? That the transaction price should be allocated on the basis of the stand-alone selling prices. Stand-alone selling prices. It is not that we equally, for example, if the transaction price is 500,000 and if there are two separate performance obligation, if there are two separate performance obligation and the transaction price is 500,000, what we will do? Whether we will allocate the transaction price equally, that is 250 for the first performance obligation and 250 for the second performance obligation. No, that will not be the correct treatment. We'll allocate the transaction price on a separate performance obligation on the basis of their stand-alone selling prices. Okay. First statement, we need to identify the correct statement where each performance obligation is satisfied at point in time. How should the allocation of transaction price be made? First option, the transaction price should be spread equally over the period. No, this is not the right thing. This is not the right thing. This is complete the incorrect statement. B, the transaction price should be allocated relatively, relative means that is in proportion to the stand-alone selling prices of the components part at the date of the contract inception. Yes, at the time of the formation of the contract, the transaction price is determined, and after determining the transaction price, will allocate the transaction price on the basis of the relative or the basis of the stand-alone selling prices. Okay, let's read out this third statement. One of the candidate has also marked the third statement as the correct answer. Let's see why it's not correct. An agreed percentage of the transaction price should be allocated to the stand-alone selling prices of any goods sold, with the balance spread equally over the terms of contract. It means the percentage of transaction price should be calculated, and then the transaction price should be allocated, and the remaining transaction price should be allocated over the period of 3 years or 2 years. No, this is not the correct treatment. The correct treatment that is guided by the IFRS 15 is that the transaction price should be allocated on the basis of the stand-alone selling prices. Is it clear to everyone? No, Michelle, it's not indicating the discount. It is saying, for example, an agreed percentage of the transaction price. Agreed percentage means the company has decided a percentage. For example, let's say there are two separate performance obligations, that is to provide the equipment as well as the technical support. They said that equipment is the major part, so this is 80% of the contract. So let's the transaction price is 500,000. 500,000 into 80%, allocate the transaction price to the equipment, and remaining will be divided, or remaining will be allocated over the period of 2 years or 3 years. That is the agreed percentage, the percentage agreed by the management. Okay. Seventh question. In relation to the sale made on 1st October. Now that the examiner is giving a hint that he's talking about the contract which is made on 1st October 2006. Let's move towards the contract 1st October 2. That is the third question of that particular case, and the first case has been targeted over there. Okay, let's read out the requirement first, and we'll definitely move on towards the question side. In relation to the sale made on 1st October 20x6, what is the amount that will be reported as the contract liability for the service plan at 31st December 20x6? It means the contract was made on 1st October 20x6 and now on 31st December 2006. Remember, he's not asking for the revenue to be recognized, asking for the liability to be recorded. What amount of liability to be reported for the year ended or as at 31st December 20x6? Okay, let me show you the question first so that you can try that particular question. Okay, what is the requirement? You need to calculate the liability at year end. Liability at year end. Please try yourself first. Okay, Junaid, showing the requirement of that particular, that is the question. You can take the screenshot of it so that that would be quite easy for you. Let me show the requirement of that particular question. That is the question number 7. In relation to the sale made on 1st October 2006, what is the amount will be reported as the liability for the service plan? Okay, the answer given by 2 candidates. Number 1, the 116. And another question and another answer is 1897. Okay. Showing you the question again. Mars, is there a discount of 1600? I don't know, Mars. We'll calculate it and we'll check it out. Junaid, okay. Let's see what will be the correct answer. Muskan, okay, 142. A few answers are there. That is 116, 1897, 142, 1600. Okay, good. 1600 is the discount. Yes, everyone, please participate in this one. Discount is of 115. We'll see that one. Okay. One two nine 117 Abdul Qadir. Okay. One 116. Okay, Michelle. Okay, it means examiner was right. It was a difficult question, and majority of the students were unable to score good marks in that particular requirement. Okay. Okay, let's try to solve this one. Okay, let's try to solve this one. First of all, we need to calculate the liability. For a liability, it means there's an obligation and we need to settle it out. Okay. First of all, there are 2 separate performance obligation. Number 1 is the equipment, and second one is the technical support. Okay, E for equipment and T for that is the technical support for 3 years. Okay. Now the transaction, standalone transaction prices are given. For equipment, it's 17 lakh 50,000, 1750, and for technical, it's 165. Okay, working in a thousands. and the total sales, or they made a sales for 1.8 million. Okay, first of all, let's calculate the total transaction price, the standalone selling price or standalone transaction price, that is 1750 plus 165, that is 1915. That is the total transaction price of the performance obligation. And customer paid, cash paid or customer paid 1800. It means 1915 subtract 1800, which means 115 is the discount element. First of all, let me know, is it clear to everyone? Okay, 115 is a discount element, and we all know that that discount will be apportioned on the basis of their standalone prices. On the basis of their standalone prices, it means 115 multiply by 1750 divided by 1915. That is 105. 105, the discount will be allocated to equipment, and then 115 multiply by 165 divided by 1915. This will make 9.9, that is 10, will be allocated to technical. It means now the discounted price or the net amount for which the revenue will be recognized. No doubt revenue is not the requirement, but let's calculate. That is 1645 is the transaction price, and 165 minus 10, that is 155 is the transaction price, or the revenue should be recognized at that particular amount. That is the discounted price. Okay, now let's recall IFRS 15. For some performance obligation, revenue will be recognized in a point in time, and for some performance obligation, revenue will be recognized over the time. Do you remember this one? That for some obligation, the revenue will be recognized for the point in time, and equipment was delivered. It means for that purpose, for that amount, revenue will be recognized in point in time. Point in time. It means revenue will be recognized as of right now. And for technical support, revenue will be recognized over the time. Let's read out the question again. The total sales for 1.8 million paid on 1st October 20x6, and the technical equipment was delivered on that date. On its own, the technical equipment would normally be sold 1750, and a 3-year service plan would normally be sold for 1,65,000. It means that technical support is for 3 years. That technical support is for 3 years. It means definitely that revenue will be apportioned on the basis of 3 years. That revenue will be apportioned on the basis of 3 years. It means that revenue cannot be recognized point in time. Okay, that agreement was made on 1st of October, and the accounting period is ending on 31st December. It means October, November, and December. October, November, December. October, November, December. 3 months. I repeat, 3 months revenue will be recognized. 3 months where revenue will be recognized. 3 months revenue will be recognized. Yes, Sunet. 3 months revenue will be recognized. Okay. And remaining will be recognized as a liability. And remember that 155 is for the period of 3 years. 3 years means 36 months. Are you getting the point? That 3 years means 36 months. It means out of that 36 months, we are going to recognize the revenue for 3 months. Remaining 33 will be recognized as a liability. Are you getting my point? Everyone, please. So it means 155 divided by 36 and multiply by 33. This will give you the value for the liability. This will give you the amount for the liability. And what will be the amount for this one? That is 155 divided by 36 and multiply by 33. That is 142. That is 142. 142 is the correct answer for the liability. Is it clear to everyone? Please let me know via chat. There could be another requirement. There could be another requirement for this question. For example, if examiner might ask you the revenue to be recognized for this period. Revenue to be recognized for this period. Anyone can answer me for this requirement. Revenue to be recognized. Revenue to be recognized for this period. Yes, 1658 would be the correct answer. Very good. Very good. Excellent. Hunaid, am I audible? Hunaid, am I audible? Okay. Audi, not Audi. It's audible. Audible. Is this question clear to everyone? Now just identify your mistakes. What went wrong? What went wrong with you guys? Those who are giving the answers, like 1897, 116, 12917. 1657. Many of the students are giving the answers as revenue to be recognized. Examiner comments. Examiner comments. What examiner said in their comments? That examiner didn't read the requirement properly, and many of the students were giving the answers revenue to be recognized. They were not reading the requirement properly. They didn't read the requirement properly. Are you guys getting the point? Examiner clearly stated that students were not reading the requirement properly. Okay, one of the candidates said that I was apportioning the liability over 3 over 10, no, 3 over 12. No, it's not a 1 year technical support. It was a support for 3 years. It means this should have been divided over the period of 3 years. Okay, let's move on towards the another requirement of that particular case. Okay, question number 8. Question number 8. Question number 8. Which of the following statement is correct in relation to the warranty work undertaken on 18th November? 18th November. So it means the requirement is related to the 18th November. Okay, that is the scenario. Read out the scenario and let me show you the requirement. There are a few statements given, but you need to first read out the scenario, that what data or information is given in that particular scenario. Please read out the scenario first. Have you gone through this scenario? Have you read that scenario? If, so that I can show you the options. Yes, please let me know the answer. Okay, let me show the scenario again. Let me show the scenario again, Michelle. That is the scenario of 18th November 20x6. Okay, we'll discuss it. Machine sold by company in January 20x6 was found to be faulty and various parts were replaced by company under warranty. Company would normally sell the replacement part for $80,000. The cost of these replacement parts were $60,000. Let me explain you the scenario that what actually the situation is. That company, for example, give the products on the warranty purpose, and once the product or the part is defective, what they do, they repair that particular part, and then they sell it out in the market. They sell that part to the market, in the market. For example, I had a product, and what I did, I just put out any other part, for example, for circuit or any IC. What I did, I just repaired that part for $60,000, and then I sold out that particular part in the market for $80,000. So it means that replaced part is being repaired first for $60,000, and then that particular part will be sold out in the market for $80,000. So that is the situation. That is the situation. And now let me show you the options for this one. Option number one, examiner is saying revenue should include 80,000. Revenue should include 80,000 to reflect the selling value of the goods provided in repairing the machine to avoid affecting the gross profit margin of a Burji company. Second option, that is cost of sales will include 60,000 for the cost of goods used, assuming no provision has previously been made by a Burji company for a warranty liability. Third, revenue should include 60,000 to match the actual cost incurred by Burji company and net off to give nil effect on profit. Cost of sales will be reduced by 60,000 of the cost of goods used, assuming no provision was previously made by Burji company for warranty liability. Okay, first of all, if I just go through this scenario again, machinery sold by company on January 2006 was found to be faulty and various parts were replaced by Burji company under warranty. Company would normally sell the replacement. First of all, mark this one. Company would normally sell the replacement part for $80,000. It's not that company sold. It's not that company sold the replacement part. It's an estimation that company would normally sell the replacement part for $80,000. It means if the parts have not yet been sold, you cannot recognize the revenue. You cannot recognize the revenue. It means any option which is recommending you to recognize the revenue is incorrect. You cannot recognize the revenue for the items which have not yet been sold. It's an estimation. The company would normally sell the replacement part for $80,000. It means whatever any option which consists of the revenue should be recognized. For example, two options are apparently there. Option A, revenue should include. No, revenue cannot be recognized as we have not sold. Any information is not given for the sale of that replacement part. The third, revenue should include 60,000. We cannot recognize the revenue right now. It means two options will be eliminated from this one. Now, let's continue the scenario. The total cost Burji company of these replacement part was $60,000. It means company has incurred the cost to repair that product or the part for $60,000, which means the company must have made some provision. Yeah, that means the warranty provision as per IS 37 So it means the correct answer, definitely majority of the students said this. The cost of sales will include the 60,000 for the cost of goods used, assuming no provision has been made previously by the company for the warranty liability. It means whatever the cost we have incurred, will recognize that amount as a cost of sales. And definitely we are assuming that no provision has been made for the warranty. Otherwise, if there had been a provision for the warranty, definitely we must have reversed that provision amount. Provision for warranty would have been debited and bank would have been credited. But assuming as no information is given in the question, so we are assuming that no provision for warranty has been made. So what we will simply do, that we will recognize the amount of 60,000 as a cost of goods sold. Yes, Mas, you are right. This particular question or the scenario links with the IAS 37. Is connected with IAS 37. No doubt. To some extent, you can say this one. Okay, why not the D option? Why not the D option? It seems like D option and B and D both are same. But there is a term or the word used by the examiner. Yes, Muskan, exactly. Cost of sales will be reduced. No, if the word increase is written, if the word increased is written by the examiner, this would also be considered as the correct answer. Remember, B and D, both options seems to be similar. If you just read out the option D, cost of sales will be reduced by 60,000 for the cost of goods used, assuming no provision has previously made by the company for a warranty liability. It means B and D is quite resembling. But why option D is incorrect, as the word reduce is used by the examiner? Is it clear to everyone? Okay, perfect. Now the last question, and that is a typical and a very technical question. It's a technical question. First of all, that particular question is linked with the contract of 1st December. 1st December. Let me show you the scenario for the 1st December. That is the scenario. Quickly read out that scenario, or you just take a picture of it, so that I will show you the requirement again. Then I will show you the requirement. Company entered into the contract for the sale of goods for $200,000 on 1st December 20x6. Company received 200,000 on 1st December 20x6. Company has a right to repurchase these goods on 1st April 2007 for $240,000. It's a repurchase agreement. And remember, please try to recall the rule for the repurchase agreement. Repurchase arrangement. Company made an agreement to sell the inventory right now on 1st December. And after 4 months, that is on 1st April, this inventory will be repurchased for $240,000. Okay, let me show you the requirement. Match the relevant amounts to show how the company should account for the contract on 1st December and its financial for the year ended 31st December 2006. It means the contract that was made on 1st December, you have to show the extract on 31st December 2006. What accounts will have an effect because of this contract at the year end? Yes, please participate. What accounts will be affected in the statement of profit or loss and statement of financial position? $10,000 revenue to P&L. Okay, revenue 200,000 in cash 0. Okay, 200,000 is a liability. Mass question mark. Good. Sir, they have not mentioned any intention to buy back the goods, so will we recognize a revenue rather than liability? Revenue 0. Okay. Liability is 30. Okay, let's start this question. Let's start this question. Okay. First of all, one of the argument that has been raised by one of the candidate that company entered into a contract for the sale of goods for $200,000. Okay, received $200,000 on 1st December 2006. Company has a right to repurchase. Always remember, if the company has a right to repurchase, this will be considered as an option. If the company has an option, this will be considered as a repurchase agreement. And if there is a repurchase agreement, it means there is no sale of inventory. There is no sale of inventory. Please mark my words. Lavisa. It means it's not a sale of inventory. If the company has a right as an option to purchase the inventory as per IFRS 15, this is a repurchase arrangement, and in a repurchase arrangement, sale will not be recognized. Instead, it's a loan transaction. Which means the company has borrowed 200,000 and after 4 months, the company will repay 240,000. Are you guys getting the point? Whenever there's a repurchase agreement, there's an option to repurchase, there is a right to repurchase. It means it's not a sale transaction, it's not an inventory sale transaction, although it's a loan transaction. Which means the company has borrowed 200,000 and after 4 months, company will repay that 240,000. This will be recognized. This will be recognized as a loan transaction, which means now on 1st December, when the contract has been made out, the entry would have been made for cash debit and loan payable credit with the amount of 200,000. Is it clear to everyone? First of all, no sale transaction will be recorded. Sales will not be recognized. Few students stated that the cash will be recorded as 0. Why? We received that amount on that particular date, on the 1st December. It means the cash will be debited by 200,000. Now let me know another thing. If we borrowed 200,000 and after 4 months we'll be paying off 240,000. Now the difference is 40,000. Can anyone please let me know what is 40,000? What is 40,000? What is that 40,000? Yes, exactly. It's a finance cost. It's an interest. And interest is for a period of 4 months. Interest is for a period of 4 months. That is the total interest. Yes, good, Mas. Excellent. That is the interest for a period of 4 months. And on 1st December, when that transactions or the contract was made, definitely on 31st December, an adjustment will be made. An adjustment will be made for the finance cost, that the interest expense. Interest expense will be recorded, finance cost debit, and loan payable credit or interest payable credit. Loan payable or interest payable will be credited by 10,000. We cannot recognize the interest of 40,000 as of now because that interest has not yet been arised. We use the matching principle or the accrual concept. We cannot recognize the whole amount of interest for the year ended 31st December. We will recognize the interest for a period of 1 month. For a period of 1 month. It means the finance cost debit and loan payable will be credited at the end of the year. Is it clear to everyone? Now let's have a requirement. Let's see the requirement. What revenue will be recognized? What revenue will be recognized? Revenue will be recognized as 0. What amount of interest expense to be recognized? That is 10,000. What amount of cash to be recognized? That is 200,000. And what amount of liability to be recognized? Anyone else, please? What amount of liability to be recognized? What amount of liability to be recognized? Is it 200,000? Is it 200,000? No. Yes, it's no Mars. It's not 30. Loan payable 200,000 and 10,000 is the another loan payable or the interest payable. It means total liability that will be reported as 210,000. It means total liability would be reported as 210,000. Yes, Dua, the repurchase date is, it means we'll buy back that inventory in the month of April. In the month of April. So it means we'll repurchase that inventory in the month of April, which means we'll pay that amount. We'll pay the amount 240,000. Today we received the amount of 200,000 and after 4 months we'll pay the amount 240,000, which means we'll pay the higher amount. Definitely there's a difference of 40,000. That 40,000 is the amount of interest, but we cannot recognize the interest, full interest or the 40,000 interest to P&L. That interest that interest is for 4 months. That is December, January, February, and March. December, January, February, and March. That interest 40,000 is for 4 months. And we are preparing the accounts for the 31st December. It means we cannot recognize the full 40,000 as an interest expense. Okay, let me recall, let me repeat how liability would be recognized at 200,000. Remember, on 1st December, we recognize the liability loan payable as 200,000. And at the end of the year, we made an adjustment of finance cost, that is finance cost debit, or we can credit the interest payable as well. Interest payable. If that loan payable is quite confusing, so we can definitely credit the amount of or the title of interest payable by 10,000. It means at the end of the year in a financial position, the total liability that would be reported in balance sheet is 200 plus 10,000. This will make 210,000. Muhammad Ali. Michelle. Good, Maz. Is it clear to everyone? Remember, these are the most difficult MCQs as stated by the examiner. Majority of the students in the world were unable to attempt these questions. So if you are facing any issues or difficulties while attempting these questions, so you are normal. You are normal, you're not abnormal. But if you can do all these questions at once, so it means you are abnormal. Yes, that's true. So shall we move on to the next question? So shall we move on towards the next question? Okay. Now the next question, that is question number 10. That was the end of the OT case. That is the next question, question number 10. Question number 10 is Yes, Dua, I just discussed it earlier that if you mark the one option correct, the other option you marked as incorrect, you will not be getting any mark for that particular question. If it is stated in the question that uh, any two of the following, you have to identify any two of the following. It means both should be correct. Is it clear? Okay, question number 10, and that is again with respect to consolidation. That is related to consolidation. And in consolidation, this question is specifically targeting to the associate accounting. Associate accounting. Please try to solve this one. Okay, Misbah 415, Hunet 415000, good. Anyone else? Okay, great, great, perfect. 415, excellent, Zabardast. It means you all are abnormal. You all are abnormal. Examiner saying normally students were unable, but you all are abnormal. You are able. Lavisa, you are normal. Lavisa, you are normal. 1,24,000. It's not the correct answer. Let's try to solve this one. Let's try to solve this one. S company acquired 25% of the equity shares of Cactus Company for $4 lakh on 1st March 20x1. In July 20x1, Cactus Company paid a dividend of $36,000. That means associate company paid a dividend of $36,000. Cactus Company profit for the year 31st December 20x1 was 115,200. All profits accrue evenly over the year. Now, what is the requirement? Requirement of that question is to carrying amount of the investment in associate. Let's first of all, let me write down the formula for this one. That is investment in associate. Investment in associate. How we gonna to calculate the amount of investment in associate? First of all, investment at cost. And what is the amount of investment in the associate company? That is 400,000. That is 400,000 is the investment. And second, we are going to add up the post acquisition share of profit. Post acquisition share of profit. Post acquisition share of profit. Now, the profit for the year of the associate company is given in the question, that is 1,15,200. And remember, that is the total profit. Now, the examiner has highlighted the mistakes that student made out in that particular attempt, that they were unable or they didn't proportionated that profit. They took the full profit. They took the full profit as 1,15,200. So 1,15,200 multiply by 10 divided by 12, that is the post acquisition. And remember, if this is the post acquisition, we are not here to take the whole profit. There is a share of profit, and share means what? The percentage. The percentage of acquisition. We are having the percentage of acquisition is 25%. It means 1,15,200 multiplied by 10 divided by 12, and will take 25% of that amount. 25% of that amount. Kindly please calculate. Can anyone calculate the amount of that calculation? 1,15,200 multiplied by 10 divided by 12 and 25%. That is 24,000. 24,000 is the post acquisition profit, post acquisition share of profit of associate company. Another thing is that is the dividend paid by the associate company. And remember, we are not the only one in the life of an associate company. If associate paid a dividend of 36,000, we cannot deduct the dividend. We cannot deduct the dividend received, or F 36,000 definitely will deduct the dividend of 36,000 into 25%. This will make 9,000. So 9,000 will be deducted. So net amount that will net amount will be 415,000. 415,000. Is it clear to everyone? Okay. There's a question by Michelle that why dividend is not proportionate to the number of months. Remember, the dividend given by the associate company, the dividend given by the associate company is post acquisition. That is given after the date of acquisition. After the date of acquisition. If it is after the date of acquisition, this will not be proportionated. This will not be proportionated. We are not going for, always remember, dividend, impairment losses, these are not for the year. These are not for the year. These transactions are not for the year. Like salaries. If there's a salary expense of, let's say, $50,000, it's a salary expense for the year. Rent expense for the year is 90,000. It's an expense for the 12 months. But if any dividend amount is given in the question, for example, a dividend of 36,000, it's not a dividend for the year, it's a dividend paid on a particular date, that is on July. That is the post-acquisition dividend. If any dividend paid by the parent company will definitely not be accounted for in this working. Dua. Okay, there's a question. It was if it was written in the if it was written that associate gave dividend 36,000 whole to the parent, that would eliminate 100% amount. Yes, exactly. For example, if there would have been a working wording that a dividend of 36,000 paid to the parent company, that 36,000 is paid to the parent company, or parent company received a dividend of 36,000 from the associate company, then definitely the full amount of 36,000 will be eliminated from this working. Okay, another question. That is question 11, and that is quite technical. That is quite technical. Let's see how many of you are abnormal. Let's see how many of you are abnormal. Misbah, please contact me after this webinar. Will definitely guide you on this regard, because there's a detail. There's a huge detail in this one. We'll definitely guide you in this one, but just contact me after this webinar. Okay. This is one of the best question, and a technical one, and examiner is testing for IAS 20. IAS 20 specifically tested for IAS 20. Remember two, which two? Muskan, two options should be selected. Very good, champion. Good. B and D. Excellent. Zabardast. Perfect. It means you all are abnormal. Seems to be abnormal. Yes, Maz, you're right. Excellent. A and D. Enam. Okay, you are normal now, right now. One normal person. At least there's a normal person in this webinar. Okay, first of all, let's read out the requirement of this question. Company acquired new plant on 1st January 2009. Oh, sorry, 2003. 2003 for $6 million. This was partly funded by the receipt of $2 million government grant on the same date. The plant was, okay, first of all, let me know whether it's a revenue grant or an asset grant. Please let me know whether it's a revenue grant. It's an asset grant. It's an asset grant. Okay, perfect. And we all know that in an asset grant, there are two methods. That is the gross method, and second one is the net method. There are two methods as prescribed by IAS 2. The company may opt for the gross, and second one is the net method. And we all know the treatment of both the methods. In a net method, we deduct the amount of grant from the cost of asset, and in the gross method, we recognize the amount of grant as a deferred income. Okay, now let's read out the requirement or the data of question. This was partly funded by the receipt of $2 million grant. On the same date, the plant has a useful life of 10 years. The company is unsure whether to deduct the grant to calculate the carrying amount of the plant or to use the deferred income method. It means the company's management is a bit confused. Based on the different ways, yes, we know that there are two ways. Account for the grant, which two of the following options can be recognized in the statement of financial position? It means here the examiner is asking you to prepare the accounts for the year ended 31st December 2003, and by using both the method, that is the gross method as well as the net method. First of all, let's do the question with the gross method. If the company selects the gross method, it means the whole amount of grant will be recognized as a deferred income for 2 million. And then the grant will be released to the other income on the basis of the depreciation method. Is it? So it means the grant was received on 1st January and we are accounting for the 31st December. It means by the end of the year, 2 million divided by 10, that is 0.2 million, will be released to the other income. Am I using the perfect word or the terminology? That the grant will be released to the other income. Is it clear to everyone? It means by the end of the year, the total deferred income was 2 million, out of which 0.2 million is released. It means it's transferred to the other income. The remaining deferred income is 1.8 million. Hello, are you all with me? 1.8 million is the deferred income at the end of the year. So that seems that it seems that a liability of 1.8 million. That seems that option A is the correct answer. One of the candidate has replied me with the option A, that is 1.8 million. Remember, the examiner has identified that mistake in its comments that majority of the student marked A as a correct answer because they didn't read out the option requirement, that here the requirement is written a non-current liability. It's not a liability of 1.8 million. It's a non-current liability. And let's recall the definition of a non-current liability. What is non-current liability? Obligation that will be satisfied after a period of 1 year. It means that 2 million, that 1.8 million, that 1.8 million is the total deferred income will be released in the subsequent period, out of which 0.2 million will be released in the next accounting period, which means the remaining is 1.6 million that will be reported as a non-current liability. Yes, exactly, Maria. That was a mistake made by majority of the students in that particular attempt. So non-current liability is 1.6 million. It means the B option, the first option we find out, that is the non-current liability of 1.6 million will be reported. Now coming back to the net asset method. Now what will be the criteria for this one? The asset cost was 6 million, I guess. Yes. Out of 6, 2 million was the grant amount. It means the net amount of asset that will be reported is 4 million. 4 million. And definitely we are going to depreciate that amount, that asset over the period of 10 years. This will give you a depreciation of 0.4. And at the end of the year, if we just calculate the carrying amount of that particular asset, that is 4 minus 0.4 is 3.6 million. Asset will be reported. It means a non-current asset of 3.6 million will be reported. It means option B and D is the correct answer. Perfect. Excellent. Is it clear to everyone? If this question is clear to everyone, please let me know. And shall we move on? Shall we move forward? Okay, perfect. Let's move on towards the next question. That is question number 12. Question number 12. Question number 12 is basically targeting to IAS 40, investment property. Read out that question. Try to solve this one. It's a drag and drop. It's a drag and drop. You all know that drag and drop. There are options given for the gain, that what amount of gain to be recognized. You have to select one option and you just drag it out and drop the correct option to that particular box. Definitely you cannot do it right now. Mas, please don't try this right now. I'm just giving you a guideline for this one. If you have any question, if you face any question in your exam, so that you have to drag and drop. Don't do this right now. Okay. Good. Intelligent. Okay, Michelle, good, excellent. Good, Hunaid. Remember, examiner said these were the questions that were difficult and students were unable to attempt. Normally, students were unable to answer these questions. The students were not able to answer correct. Students were not able to answer these questions correctly normally. So if you are answering it, and if you are giving a correct answer or the right answer, it means you are not normal, you are abnormal. Great, excellent, Dua, Abdullah, Maham, good. Ashish, good. Muskan, please work out again. Try to work it out again. Try to solve this one again. Try to reconsider this one. Ariba, good. Okay, read out the question. Let's read out the question. Barlow Company owns a property which it rents to third parties and does not occupy itself. It means the property is accounted for, property is given or let it out to the other party. It means it's not in the own use, it's not the owner occupied property, which means IS 16 is not applicable. IS 16 is not applicable. It acquired the property on 1st October to, sorry, 1st January 20x5 for $10 million at 31st December 20x5. That is at the end of the year. The fair value is estimated at 10.6 million and expected selling cost is 0.2 million. Okay. At 1st January 2005 to 20x5, the property had an estimated useful life of 40 years. The company uses the fair value model to measure the carrying amount of the property. As per the IS 40, the financial extract for the 31st December 20x5 should be prepared. Now, let's consider the comments of examiner. What examiner said that in IS 40, the property, investment property should be measured at its fair value, should be measured at its fair value. Majority of the students considered the expected selling cost of 0.2 million. Remember, it's not the fair value less cost to sell. It's not IS 36. It's not the IS 36. Majority of the students made the blunder and they considered the fair value less cost to sell instead of only the fair value. I don't know if you guys have did this. So examiner pointed out the mistake that majority of the student considered the fair value less cost to sell instead of the fair value only. Remember, in IS 41, agriculture, yes, we recognize, we consider the fair value less cost to sell. In IFRS 5, yes, we consider fair value less cost to sell. In IS 36, yes, we consider fair value less cost to sell to calculate the amount or to calculate the recoverable amount. But in IS 40, it's only fair value. So the property was purchased for $10 million, for $10 million. And now the value at the end of the year is 10.6. Straight away, there is a gain of 600,000. And in IS 40, the fair value gain is directly recognized to P&L. It means the statement of profit and loss and 600,000 will be reported in P&L as an amount of gain. It's a fair value model. It's a fair value model, Muskan. It's a fair value. In fair value model, we do not calculate the depreciation. We do not calculate the depreciation. Yes, in a fair value model, we are not going to calculate the depreciation. Is this question clear to everyone? Okay, let's move on towards another question. That is question number 13. Question number 13, IFRS 15. It's linked with the IFRS 15. IFRS 15. Please try it. to calculate the answer of this question. Read the requirement properly. Read the requirement properly. And that contract is related to the construction contract. That question is related to the construction contract. And remember, the construction contract area was recently upgraded. That was recently updated by ACCA. So you have to account for with the updated treatment. You have to account for with the updated treatment. Good, Michelle. Good, Muskan. Good, Laiba. Ariba, excellent. Good. Again, let me recall you. Good, champion. Okay, let me recall you first. Again, as per the examiner, this was the difficult question and majority of the students were unable to mark the correct answer. Abdul Qadir, 900 is not the correct answer. 900 is not the correct answer. Let's try to work it out. Okay. The company commenced to work on the construction of a significant asset for one of its customer. It means company is constructing the asset for one of its customer. It means it's not a property, plant and equipment. It's not IS 40. It's not IS 40. On 1st May 20x5, the construction is scheduled to run for 2 years and the total contract price is $5 million. $5 million is the total contract price. At 31st December 20x5, the following details were obtained. The percentage complete was 50%. It means the percentage is already given in the question. Now, most of the students ask that whether it's the input method and output method. You should not have any confusion regarding this one. You're not supposed to ask the question whether it's an input or the output. You should be least bothered about this one. If the percentage of completion is given in the question, just go ahead. It's quite I would say that it's not necessary to identify whether input method or an output method. If percentage is given, just go ahead. The amount invested to the customer totaled $1.7 million. The amount received from the customer totaled $0.8 million. What is the total amount that should be included in the statement of financial position as a contract asset or a contract liability? So it means we are not here to calculate the profit to be recognized. We are not here to calculate the revenue to be recognized. We are simply going to calculate the contract asset or contract liability. And the simple formula to calculate the contract asset or the contract liability is number one, that is revenue recognized to date, less amount invoiced to customer. Amount not received from customer, amount invoiced to customer. And amount invoiced to customer is already given in the question. That is 1.7 million. That is 17 lakh. Now let's try to calculate the revenue recognized. The total contract price is 5 million. That is 50 lakh. And the 50%, 50 lakh. That is 50% is the percentage of completion. That will make 25 lakh. It means 25 lakh minus 17 lakh. And this, the resultant or the difference would be 800,000. And if it is positive, it means it's a contract asset. It's a contract asset. It's a contract asset. It means the full amount will be typed over here. Remember, do not type 0.8. Do not type 800. Please type the full value, that is 800,000. Is it clear to everyone? Okay, let's move on towards another question. That is the OT case. That is the OT case. And the most difficult one. Yes, Muskan, exactly. Exactly. Now that is the question. That is the scenario basically. A detailed one. It's a detailed scenario. Try to read out the scenario at once, and then we'll move on towards the requirement of that particular OT case. That is a complete scenario in front of you. Please try to read out this question and grab the knowledge, what information or data is given in the question. Basically, this question or OT case is the merger of IAS 16 and IAS 21. IAS 16 and IAS 21. That is foreign currency. What I have observed in the OT cases, if you have a first glance on that particular OT case, you must have afraid of it, na? That would have seemed like a nightmare. That what is this, and a lot more data is given in the question. But remember, once you will move towards the requirement side, that is the particular OT cases or the question requirement, you will feel and you will realize that the details are given, but the requirements are quite simple. So please don't afraid or don't be scared of that data given in the question. Always try to read the question properly and move towards the requirement side. We have observed in and you must have observed in your practice that majority of the OT cases, if there are 5 questions, out of 5, 1 or 2 questions would be quite general and they have no link with the scenario. And this happens a lot. If you guys have read the question, so please let me know. We will move on to the requirement of that case. The first requirement of that case. All debts are all reads, sir. Okay. First requirement. Try to answer this one. First requirement. The first requirement, and I told you earlier that out of 5, 1 or 2 questions will be independent with the scenario. They have no link with the scenario. In accordance with the IS 16, the property, plant, and equipment, which 2 of the following statements are correct? And it's a theoretical MCQ. It's a theoretical question. A and C. Okay, A and C. A and D, A and C, okay. B and D, okay. A and C, A and D. A and C, okay, check. Okay. Let's read out the requirement, and we have to select two of the following statements. Correct statements should be selected. Okay. First statement, the depreciation charge should be recognized in profit or loss. Yes, this is the correct statement so far. Normally, depreciation charge is recognized to profit or loss unless it is included in the carrying amount of another asset. What does it mean? For example, if any property, plant, and equipment is being used for the construction of a building, let's say, for example, a machine is being used for the construction of a building, definitely now the depreciation of the property, plant, and equipment, or the equipment of the machine will definitely be capitalized in the cost of non-current asset. I repeat, the statement is quite true that depreciation charge should recognize as a profit or loss. Yes, normally the depreciation is charged to P&L unless if it is included in the carrying amount of another asset. Yes, there could be a possibility the depreciation may be capitalized in the value of other asset. And normally the students were with A. So A is the correct answer. Ariba, please listen to me very carefully. A is the correct answer. Reason being, the depreciation charge should be recognized in profit and loss. Yes, that's true. Normally, the depreciation is charged to P&L unless there is an exception now. There is an exception now. It is included in the carrying amount of another asset. Yes, sometimes the depreciation is capitalized or added in the value of other asset. It could either be inventory as well. For example, if any machinery is being used for the production of inventory, definitely that amount, the amount of depreciation, remember the overheads. What we normally include in the overheads, that is indirect material, indirect labor, supervisors' wages, depreciation of plant and machine. It means that depreciation of the plant and machine could either be capitalized in the value of asset, could either be included in the value of asset. Yes, exactly, Hunad. You are perfect. You are right. Even if you have used the machine or equipment for the development in the development phase, still then you will also recognize the depreciation in that development phase, or the development cost will be capitalized. So statement A is correct. Okay. Now there's a confusion between the C and D. Okay, let's read out the another statement, that is B. In a B statement, when fair value is used, it means the revaluation model is used to measure the property, plant, and equipment, then all. Don't worry, it's not a technical fault. Then all the other assets must be measured at the same principle. No, that is not the requirement by IFRS. What IAS 16 said that if you are moving towards the revaluation model, then whole class of asset should be revalued. Not all the assets should be revalued. Exactly. Very good. Excellent. Very good. Same class of asset, not all other assets. If you are moving towards the revaluation model for the building, it means all the buildings shall be revalued, not equipments are required. It means the B statement is incorrect. Okay, now C statement. The cost of safety inspections that are legally required to operate the property, plant, and equipment can never be capitalized. Remember, the safety inspection means the overhauling cost. The safety inspection means the overhauling cost. It's an overhauling cost. And as per IAS 16, we have gone through this one. If there is any safety inspection that is legally required by law, it means you have to capitalize that overhauling cost. Is it clear to everyone? So it means that never be made the blunder. It's not the correct option. It's not the correct option. It's not the correct statement. And please remember the other name of overhauling cost. Sometimes standard use the word safety inspection. So safety inspection is the other name of overhauling cost. Last statement, at the very least, the residual value and the useful life of an asset should be reviewed at the end of each reporting date, each financial year. And yes, because the life, the scrap value, these are the and the method, these are the estimates. And as per the general principle or the rules regarding the IFRS, that these estimates should be reviewed at the end of each reporting date. If there is any significant change, so as per IS 8, there should be a change in estimate and it should be dealt prospectively. Is it clear to everyone? It means option A and D is the correct answer. Option A and D is the correct answer. Yes, Maz, exactly. Disclosure is also required. If there is a change in estimate, disclosure is also required. Okay, next question. Next question. In accordance with IS 16, the property, plant and equipment, what is the total aircraft depreciation charged to P&L for the year ended 31st December 2005? A very simple and a basic question. Please take the snap or the picture of that requirement. So I just show you the question, the data of this question. Please take a picture of this requirement so that I show you the data. Okay. Now there's a data in front of you. Please give me the answer of that particular question or the requirement. Okay, Michelle, good, excellent. Good, Misbah. Good. Ashish, Inam. Perfect. That is 1280, 1280. And that was a simple requirement. Now just see, in that particular OT case, the requirement one was theoretical and it was not that difficult. Definitely you would agree this one. The second requirement, that is to calculate the depreciation. You just need to calculate the depreciation, the life of the asset, and the cost is given in the question. It means you just need to calculate the depreciation. For airframe, definitely you calculate the depreciation 8,000 minus 8,000 minus 500 divided by 20 year was the life. Can you please calculate the depreciation for airframe? 375. Thank you. Another asset is, that is engine. That was the airframe. Second is the engine. The cost of the engine was 5,000 and the scrap value is 600. So 5,000 minus 600 divided by the life of that asset is 8 years. So the depreciation is 550. Thank you. Third asset is testing cost. And the cost of that is 600. There is no scrap value for this one, that is 0. and the life of that testing is 8 years. So the depreciation would be 75. Perfect. And the last asset is the interior, and the cost of the interior is 1400 and life is 5 years. That is 1400 minus 0 divided by 5. This will make 280. And the total depreciation that would be reported as 1280. That is the correct answer for that particular question. So it means the answer that you're going to type is there 1280, and triple zeros are already there. Great. Question number 16. Now, question number 16 is linked or connected with the IAS 21. Now that is linked with the IAS 21. Please read the requirement first, so that I will show you, and then I will show you the data for that particular requirement. I will show you the data for that particular requirement. First, read the requirement. What is the total loan liability at 31st December 2005? What is the total loan liability at 31st December 2005? What is the total loan liability? Should I show you the question or the data? Yes. Okay. Now the data that relates to that particular requirement is this. From here till there. Total loan liability at 31st December. Total loan liability at 31st December. Great. Perfect. Okay. Perfect. 12.5 million. That is the correct answer. 12.5 million. Let's read out the question. To fund the purchase aircraft, Novair borrowed 10 million euros. 10 million euros was borrowed on 1st January 20x5. The interest loan is insignificant, should be ignored. The loan was due to be repaid in 4 annual equal installment, with the first repayment on 1st January 20x6. It means at 31st December 2005, no loan amount is repaid. 10,000 euros were borrowed on 1st January 2005. Okay. The currency exchange rate is given over there. Now, first of all, we need to identify the functional currency. The functional currency is dollar, which is given in the question. And second step, we need to identify whether the functional currency is strong or weak. Whether the functional currency is strong or weak. So, in order to calculate, in order to identify that on the 1st January, if we just see the exchange rate, that is quite similar or the same. But on 31st December, if we just look at the exchange rate, 1 euro is equal to 1.25. It means the functional currency is weak. Functional currency is weak. It means 1 euro is equal to 1.25. It means functional currency is weak. Now, if the functional currency is weak, it means the resultant amount, the converted amount, the translated amount should be higher in number. If the functional currency is weak, it means the translated amount should be higher in number, more in number. Okay. Now the €10,000 were borrowed, and on 31st December there's no repayment. Simply we are going to multiply that 10,000 multiply by exchange rate, that is the closing exchange rate. Closing exchange rate is 1.25. 1.25. So answer would be that is $12.5 million. Is it clear to everyone? The simple answer would be that is 12.5. There is no need to work out. There is no need to calculate the gain or loss for that particular specific requirement. As the requirement is quite simple, you need to calculate the total loan amount, the liability amount at the end of the reporting date. So 12.5 million is the total borrowed amount or the loan amount. Okay, another requirement from that particular OT case. Read out the requirement or take the screenshot of this one, and then I will show you the question data again. No, we are not here to divide dua, reason being because the functional currency is weak. And if the functional currency is weak, the resultant or the converted amount should be more in numbers. Like if we compare the dollar and Pak rupee. Dollar and Pak rupee. If Pakistani rupee is the functional currency and dollar is the foreign currency, $1 is equal to $1 is equal to, let's say, 300. $1 is equal to Pakistani 300 rupees, which means the Pakistani rupee is in a weaker position. So whenever we convert the dollar into Pak rupee, we get the huge amount. For example, $10. So it's just 10 on the one side. But once we will convert it into the Pak rupee, this will be huge in number. It means 10 multiplied by 300. Yes, do exactly. Okay, I'm showing you the question or the data. There is information related to that question. Okay, good. Nice. Nice, very good. A and B is the correct answer. Why? Let's read out the requirement. The balance on the loan liability at 31st December 2006 was 7.5 million. But remember, at 31st December 2007, the balance is 5 million euros. In accordance with the IS 21, the effects of the changes in the foreign exchange rate, which two of the following correctly reflects the foreign currency transaction, should be reflected in the financial statement for the year ended 31st December 2007. We all know that the remaining liability at the end of the year, that is 31st December 2007, is 5 million euros. So it means 5 million euros. So what we have to do, we have to calculate the dollar amount, or we have to calculate or convert into the foreign currency, oh sorry, functional currency value. At 31st December, what is the exchange rate? Functional currency, what is the exchange rate at 31st December? 31st December 2007, that is $1. It means the 5 million euros will be converted into the functional currency, which will definitely result in 5 million. So first thing is, that is the liability at 31st December 2007 should be stated at $5 million. It means liability will be reported at $5 million. Another thing is that earlier the 5 million at 31st December 2006, the 31st December 2006, last year, the exchange rate that would have been reported in the balance sheet at 1.10. It means 5 million multiplied by 1.10. This will give rise to the 5.5 million. And now the liability is 5 million. It means liability is reduced by 0.5 million. And if the liability is reduced, it means it's a benefit, it's a gain. So that there will be an exchange gain which will be reported in P&L. So it means a foreign currency exchange gain of 5 lakh should be reported in P&L. Is it clear to everyone? Okay. Last question of that OT case. Last question of that OT case. In accordance with the IS 36, impairment of asset, which of the following statement is correct? There's a general question. There is a general question that is with respect to IAS 36, impairment of asset. Let me show you the requirement or the data for this question. First, last paragraph is linked with that particular requirement. Last paragraph is linked with that requirement. Please read out that requirement. Read out that data or information given in the question. Okay, now let's have a look on the requirement of this question. D. Okay, good. Good, excellent. In accordance with IS 36, impairment of asset, which of the following statement is correct? First statement, let's read out the first statement. Nowhere company must not recognize an impairment loss for the engine since the recoverable amount cannot be estimated reliably. This cannot be done. If you cannot estimate the recoverable amount, recognize that asset at the zero value. If you think that the recoverable amount is not there and it will be scrapped, so it means you have to recognize that asset to the zero, but you have to recognize the impairment loss. Even you can estimate the recoverable amount. Okay, second statement. Nowhere company must determine the recoverable amount of the engine using the depreciated replacement cost method. No, it's not the case. Recoverable amount is the higher of fair value less cost to sell and the value in use. Nowhere company must write the carrying amount of the engine down to the residual value since the recoverable amount cannot be estimated reliably. No, this is not the case. As per the IS 36, the recoverable amount is again the higher of fair value less cost to sell and the value in use. It's not written in IS 36 that you just consider the scrap value as the recoverable amount. You cannot do that. D. Nowhere company must determine the recoverable amount of the aircraft and allocate a proportion of any impairment loss to the engine based on their carrying amount. Yes, because it's written in the question or the data that it's a CGU. CGU means it's a cash generating unit. It's a cash generating unit. In a cash generating unit, now the impairment loss will be calculated for a whole CGU and then the impairment loss will be allocated to all the assets in a proportionate way. Is this question number 18 is clear to everyone? Mas, in the last question, in the previous question, yes, there was the 7.5 million, but that was the liability in the last year. In the last year end, there was a liability of 7.5 million euros. And by 31st December, definitely there will be a payment of that particular liability. There will be a payment of that particular liability. But at the end of this year, there is a remaining liability of $5 million. 5 million euros, sorry, 5 million euros. So we'll calculate the exchange gain or loss on that particular amount of outstanding amount. We'll calculate the exchange gain or loss for that particular outstanding amount. Yes, exactly, Mas. On that particular date of reporting, no, Muskan. Always remember, whenever we try to calculate the gain or exchange gain or loss, we always recognize the gain or loss as per the last reporting date. For example, always remember that exchange rate will increase or decrease on a daily basis, but we never recognize the gain or loss on the daily basis. What we do normally, if the amount is recognized in the last accounting period, that is at the end of the 31st December 20x6. Yes, the liability was recorded on that particular date, and now we'll compare the liability at the reporting date. We'll not compare the liabilities with the transaction date. We are going to calculate the gain or loss and we'll be comparing from the last reporting date. not from the transaction date, because at the end of the each reporting date, the liabilities or the amount will be restated or translated. So we'll not compare the exchange rate with the historic rate or the transaction rate. We'll compare the exchange rate with the last reporting date in order to calculate the gain or loss. Yes, Mas, definitely. Gain or loss will be reported in P&L. That gain or loss will be arising because of the change in liability, Muskan. That gain or loss is arising because of the change in the liability. Because the liability has risen to, therefore the liability was declined. So it means there's a gain. Yes, exactly. Exactly, Mas. Okay, one last question, that is the again related to the consolidation, and this is a very good question, and this is a very good question. Please try to solve this one, and this one is going to be the last question for this session. Please try to solve this one. Please try to solve this one. Okay, first answer, that is 128760. Okay, we'll see that. We'll see this one. 128760. Please try, everyone try to solve this question. It's a very good question of consolidation. Again, it is extracted from the examiner's report. Let me tell you the requirement of this question. What is the amount of profit attributable to the equity of shareholder? It means it's talking about the group profit. It's talking about the group profit. And we all know that at the end of the P&L, consolidated P&L, we already had a working, that is, we always have a working, that is the profit attributable to number one, the group, and second one was the NCI. So it's talking about the group profit. What will be the amount of group profit? It means you have to prepare the attribution. You have to work out for the profit attributable to. The first answer that came by Michelle, that is 128760. Okay, another answer by Mars, 999 and 3. Okay, that is 100,000. Okay, 99,993. Okay. 127760. Okay, another answer is 127760. Michelle, no, it's 127760. Liva 127760. Good. Okay, we will see this one. We will see 12770. Misbah. Okay. Okay, 60. Correction made by Misbah. That is, it's 127760. Good. 119720. Inam. Okay. 119720. Sharjeel 127760. Okay. Now let's try to calculate this one. First of all, let me read out the question. Alpha Company acquired 80% of the ordinary share capital of Bravo Company on 1st September 20x4, and the date of reporting is 31st December. It means it's a mid-year acquisition. It's a mid-year acquisition. Okay. And 40% share capital of Charlie. It means Alpha is the parent, Bravo is the subsidiary, and Charlie is an associate company. For number of years, it means it's a number of years. It means Charlie was acquired quite a couple of years ago. On 30th November 20x4, it means during this accounting period, Alpha Company sold goods to Bravo, making a profit of $2,000. It means, first of all, the most important thing is who sold goods to whom. Alpha sold goods to Bravo. It means parent sold goods to a subsidiary company and making a profit of $2,000. Half of the items were remain in the inventory. It means 50% of the goods remain in the inventory, which means 1,000 is the amount of unrealized profit. And remember that unrealized profit is in the book of a parent company. Parent company sold goods to a subsidiary company. It means that unrealized profit is incorporated in the accounts of a parent company. Okay. Let's move on towards the extracts of three companies. That is profit for the year. It means it's a 12 months profit. It's a 12 months profit given for three companies. Alpha, that is 80,200. Bravo, 51,900. And Charlie, that is 86,800. First of all, we need to calculate the adjusted profit. Let's say Alpha, the profit is 80,200, and we know that the unrealized profit is in the books of Alpha Company. So we need to adjust that unrealized profit from Alpha Company, that is 1,000. But before that, one more adjustment that is required that I was forgetting, and examiner pointed out that majority of the students didn't do that, and that was the proportionate number of months, that is post acquisition months: September, October, November, and December. It means the subsidiary company, that is Bravo Company's profit will be apportioned on the basis over the period of 4 months. Okay. Now the question is that unrealized profit will be adjusted from the profit of a parent company, that is 1,000. Now, point to be remembered, this unrealized profit, what examiner pointed out, that majority of the student deducted that URP from the profit of a subsidiary company. I repeat, majority of the students or the candidates, what they did, they deducted the URP from Bravo Company's profit or the profit and loss. Although that profit is in the accounts of a parent company, so it should be deducted. From the accounts of a parent company. It means now the adjusted profit would be 79,200. Okay, now B Company's profit is 51,900, and it's a 12 months profit, 51,900. First of all, September, October, November, and December. Multiply by 4 and divided by 12. Please let me know the answer of this calculation. 51,900 multiplied by 4 and divided by 12. This will make 17,300. 17,300. That is the 4 months. That is a post-acquisition profit. And no adjustment is required. Unrealized profit will not be adjusted right now. Just because the goods are sold by parent to subsidiary, and unrealized profit is adjusted in the books on the profit of a parent company. Now, Charlie company, the profit for the associate company, profit for the year of the associate company is 86,800. 86,800. Remember, for associate company, equity accounting is adopted. And in equity accounting, what we do normally, the share of profit for the year, share of profit, associate company, the share of profit is included in the consolidated P&L. The share of profit is included in the consolidated P&L. It means 86,800 and the share of profit is 40%. The resultant would be, kindly calculate the amount, please. 34720, 34720, and this will be represented as share of profit in associate. Sophia, that is share of profit in associate, share of profit in associate, and this will become the part of your consolidated P&L. It means now the consolidated profit, the consolidated total profit, consolidated profit would be 79,200 plus 17,300, and definitely share of profit and associate will become the part of your consolidated. No, we are not gonna do proportionate this one because the associate was acquired quite couple of years. Muskan, associate company was acquired quite couple of years ago. Okay, so the consolidated, no, another question by Maria, 17,300 would not be multiplied. Just recall the consolidated P&L, Maria. Consolidated P&L, revenues, cost of sales, other expenses, operating expenses, income taxes, all of the line items were consolidated on 100% basis. Do you remember this one, Maria? Do you remember this one? So it means the profit of a subsidiary company will not be on a percentage basis. This will be taken on 100%. I'm calculating the consolidated profit. That is a total profit. And 34,720. Now let me know the consolidated profit. Please calculate the consolidated profit. 79,200 plus 17,300 plus 34,720. The total profit or the consolidated profit, or we can say that the profit after tax. Am I right? 131,220. That is the total or the consolidated profit. So 60% of URP 1000 is sold to NCI. Yes, we are going to proportionate it. Mas, just wait for a minute. The requirement is for group profit, Michelle. The requirement is for group profit. Yes, group profit. The requirement is for the group profit. Let me calculate it. Okay. That is not the answer. That is not the answer. That is the total profit. We need to calculate the group attribution. Profit attributable to group and NCI. Group and NCI. The total profit is 131,220. The total profit is 131,220. Now we need to calculate the profit of NCI, and we all know that the working of NCI is quite easy. That out of that total profit, how much profit belongs to NCI? How much profit belongs to NCI? What amount of profit is attributed to NCI? And what is NCI? The definition of NCI. Definition of NCI. Definition of NCI is subsidiaries 20%. Am I right? The definition of NCI is subsidiaries 20%. Subsidiaries 20%. How can it be 40%? How can it could be 40%? The acquisition is 80%. That 40% is for Charlie. That is the associate company acquisition. Michelle, are you getting my point? Michelle, are you getting my point? Okay. That is subsidiaries 20%. And what is the profit for a subsidiary company? What is the profit for a subsidiary company? What is the profit for a subsidiary company? What was the total profit? What was the total profit for a subsidiary company? Yes, The total profit for the subsidiary company was 17,300. And 17,300 into 20%, this will make 3,460. It means out of that total profit, the profit attributed to NCI is 3,460, and definitely the balancing figure would be for the group profit. The balancing figure would be the group profit. And what is that group profit? 131,220 minus 3,460, 12,760. So that was the main requirement. That was the requirement. That was the examiner's requirement. And this was seriously a very good and a difficult question. I suggest that it was a very good question. For practice and for good understanding, you must revise this question. I would definitely recommend you. Okay, Maz, why we deduct whole URP from parent? As because remember, Maz always remember, parent is always 100%. Parent will never. Okay, Muskan, I'm showing you the question. Parent will never compromise. Maz, always remember, this is you. You have to compromise. Subsidiaries, retain earning or profits are divided in two. That is the group and the NCI. Here, the goods were sold by parent to subsidiary. Maz, the goods were sold by parent to subsidiary. This is not written in the question, Maz. Who told you this? The parent sold 60% of group. Let's read out the requirement or data. Alpha company sold goods to Bravo. Bravo is the subsidiary, not the associate. I think you are considering that goods were sold to an associate company. No, goods were sold to a subsidiary company. If you are clear with this one, I'll ask you another question. Please, everyone, if you are clear with this question and the requirement, what if the goods were sold by the subsidiary to parent? What if the goods were sold by subsidiary to parent? If I just focus on this statement, if the goods are sold by subsidiary to parent, let's say if the goods are sold by subsidiary to parent, what will be the change in that working? Where will be the change? Where will be the change? Where will be the change? To make it very simple, Mohammad Ali, to make it very simple, we won't have deducted that URP from the parent company. Am I right? We must have deducted. Exactly. We must have deducted that URP from the profit of a subsidiary company, that is 17,300 minus 1,000. Exactly. We must have adjusted the profit of a subsidiary company. Yes, Muskan, you're right. Yes, then NCI would have been 3,260. Exactly, Muskan. Exactly. Very good. With the percentage amount, Maz, if the parent would have sold the goods to the associate company, then we must have calculated the percentage. For example, if the URP is 1,000 and associate company is with the 40%, we must have calculated the 40%. That means now the URP amount that will be adjusted, it would be 400. Yes, Maz, you are right. Exactly. In associate, there's an exception that we never adjust the whole URP. We calculate the share of URP. Share of URP. Is it clear to everyone? This was a good question. Muskan, are you done with this question? Is there any problem? Everyone, please notify me with the chat box. Okay, great. There are other questions too, but definitely there's a lack of time period. But I can share you these questions. If you can definitely contact me, I will definitely provide you with this question. These are other questions as well. And these are very good questions with respect to consolidation. Even you want to take a picture of it, you can definitely. We can have definitely, I will share you the PDF of that question. Please directly contact with me. Those students who have my contact number, it's good. And those who don't have, so you can just note down my contact number. You can contact me on WhatsApp, and I'll provide you the details or the that particular file I can share with you guys. So this was the end of the session, and thank you guys for joining this session. I hope this session was useful for you guys. And if you face any problem or difficulties, definitely you can contact me, and I'm gonna to help you out in this one. Best of luck for your preparation, and best of luck for your exams. And I wish and I pray that you all ace your papers with good marks, inshallah. Thank you so much for attending this session. And poll has been generated by the admin department. So please, I would recommend you to please uh, answer that polling questions. Thank you so much for joining this session. Jazakallah. Allah Hafiz.